Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, very, very excellent. Thank you.
Well, you seem to be in less salubrious surrounds than normal. Where are you?
I am in Timmins. I actually got on a plane for the first time since March 2020. Fortunately, we've had some Delta variant cases, but not too many, and the overall caseload is low enough that it's safe enough to travel by plane. So I flew up here a few days ago for meetings with one of the local First Nations groups that we're in discussions with, and then have another event this afternoon that the finance minister is here in Timmins as well. So it's getting back into those type of things now that now you can actually meet people face to face again. So,
did you have any moments of flight rage on your flight? Was everyone well behaved?
No, but it just reminded me again of the quote joys of air travel. Is flight was 45 minutes late. Got to Timmins and had to wait an hour for a cab to come. So it was, that.
Yay!
So got my hotel room about 1 a.m. So yeah. So
I was like, I was then asking. I saw something my kids showed me. It was about some guy. He'd got on a flight absolutely hammered, been smoking goodness knows what, and had to be duct taped to his seat.
No, they just leave that by the front entrance on getting onto the plane, just as a warning. So.
Yeah, that's good.
Hey.
Right, we better talk nickel.
We do.
You're a busy boy up there at the moment. So, let's start with nickel prices. What's going on?
Yeah, so they were managed, as we talked about last week. They were heading towards $9, and I said they probably would get there. It would take a few whacks to get there. I didn't think it was going to quite happen in a few days, but it broke through. $9 didn't stay there. But it's held up really nicely in the $8.75, $8.80 a pound range, $19,300, $19,400 on the per ton basis. And again, you look right across all the metrics, unlike copper, where we're seeing, again, some signs in the physical market that things aren't as great. In nickel, it is green all across the board. LME inventories declined another 12%, which is about 5% of the total inventory. So 20 weeks, this pace keeps up, all the inventory, 5% total inventory. So in 20 weeks, all of that inventory would theoretically be gone. So, we'll see what happens over the coming months. The Chinese data, all supportive. NPI prices up, stainless prices up, sulphate prices up, ore prices up, and again, up 3 to 5% week over week. So again, it's tough for LME prices to fall if all of those metrics are heading in the opposite direction. We've got power cutbacks in various parts of China, and that's being supportive because that's helping take a little bit of incremental stainless and NPI production out of the market, which is helping to keep things very tight. And again, in terms of setting the stage for the fourth quarter, where Philippine ore imports dry up, we only had an increase of 160,000 tons of ore inventory, which is, again, a fraction of what the market's going to need for this winter. So, again, in very, very, very good shape.
What are the other big supply demand drivers at the moment?
Well, the big thing, we had Q2 production reports all come out over the last 2 weeks. And, what's amazing is, in the first half of the year, in the, more quote traditional nickel supply, you've had over 100,000 tons of supply disruption. So that was Norislk that we talked about with the water coming into parts of the mine, the issues in New Caledonia at each of the plants that were there. And so, but again, 100,000 tons is nearly 4% of global supply that's been lost from most, where most people would have forecasted supply to have come. So again, that's contributing to this, very meaningful deficit market that we're in today, which again, most analysts were calling for a much larger, or we're calling for surpluses this year. The other big thing when you step away from China and look at, okay, what's happening in the rest of the world, stainless, again, globally is just in rock solid shape. Inventories are very low, prices continue to move higher. Most stainless steel mills in the West are sold out till early next year already. So, and without any, the things I would start to worry about is if you start to see prices come off or you start to see inventories build a little bit, that's maybe a sign that things are starting to loosen up a bit. But there's no issues on that front at all. And again, nickel prices held up this week, despite various markets being spooked by Delta variants popping up in China. We'll see how that unfolds over the coming few weeks here. But again, very, 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 very robust. So it's all lights are green. And so again, very much expect nickel to make it through $9. And we'll see whether it's got enough momentum to get through to $10 a pound by year end. But we're definitely heading north of $20,000 a ton.
So all good. It continues. The pressure stays on. I want to talk about Diggers and Dealers, which is a conference, physical conference in Western Australia, just north of Perth, which happens every year. BHP were there, and there's sort of statement made which kind of caught my eye. Around their expectation for nickel in batteries to grow by 500% this decade. So they are going big. And we talked about Norislk last week. What can you tell us?
Yeah, again, if you want confirmation, that nickel is for real, that, the nickel market is going to unfold and be a pretty good place to be. The fact that BHP is putting their money where their mouth is the biggest part of that. So when we saw the BHP deal going to acquire Norislk, the big part of this announcement today is something they talked about, but they kind of made it sort of very much sort of formal, is they're adding a third SAG mill at their Mount Keith mine, which is a large low-grade sulfide deposit like our Crawford deposit. And so, it was great to see, that the BHP is adding capacity at that mine now is over 25 years old. And they're still adding capacity. They've got other deposits that are nearby. Again, these large low-grade sulfide deposits can occur in clusters. So they're bringing in a new deposit and integrating it into that Mount Keith plant. So that'll be providing feed into that third mill. But, they made it very clear we're going to continue we want to continue to grow our nickel business. We want to be a major player in the battery space. They highlight the fact that they're selling 85% of their nickel already into the battery chain. The briquette product that they make is an ideal product today to make nickel sulphate. That's the product most people like to use. Again, we've talked in other shows about how we think that's going to evolve going forward. But, I think, that was, very, very important that expanding large low-grade deposits. And I think the other component that was important was, they made announcements that they've signed deals with other power suppliers to have them build renewable energy plants to help feed their nickel operation and look to lower carbon emissions by 12%. So, the fact that they're going through all that work to lower their emissions by 12%, where again, projects like Crawford, are inherently much lower carbon, is a big advantage.
It's kind of interesting, BHP's move. I mean, we have joked in the past about they always seem to move near the top of the markets when they, instead of actually picking up deals. But, obviously, you remind people, they did actually pick up some Norislk assets last year. We talked about Norislk happening as well. It has been only 1%. Nickel is 1% of their earnings up until now. This sea change obviously suggests that they're going to be spending a lot more money, a lot more time in the nickel space, and that's got to be good for everyone else, hasn't it?
Oh, again, for the entire chain, and the fact that they're, I think part of the price for Norislk reflects the scarcity value of nickel sulfide assets. So, they paid up big for a project that's still a long way away, and again, they've made it very clear, and they reference this in the announcements around Norislk stuff that in this presentation that, they see they have three fundamentally future-facing metals that are going to be key to their business: copper, nickel, and potash. So you would have to believe that the senior executives there will have metrics around, achieving success in each of those future-facing metals, as this decade goes on. So I think the other big thing, if BHP is thinking that way, then all the other majors are thinking in a similar vein. So I think I wasn't expecting the M&A stuff to heat up until early next year, but I think with the nickel market heating up ahead of time, the M&A market heating up ahead of time, I think is really going to set the stage for a pretty exciting 2022, 2023 from a nickel investment front.
Oh, for sure. Because every time you hear a forecast and you think, okay, those are the numbers, you get another forecast comes out which shortens the time frame even more. And I think it seems to be driven out of the good news coming out of the US in terms of their attitude, but also the fact that automotive companies, battery manufacturers are getting quite serious about supply chains now. And talking of M&A, Sibanye-Stillwater, they've been at it.
Yeah. So again, this is another great sign of, I think, what's to come in the next 2 or 3 years. Particularly, we joked about BHP buying at the top of the market. Sibanye-Stillwater has been a great track record of buying assets before they really start to move. So they built a gold business, then built a PGM business from within a very short span of time. They went from basically zero in the PGM market to be one of the leading platinum group metals producers globally in a very, very short span of time. And so last year they announced, we're going to start to build a battery metals business. And so they acquired the nickel refinery from Eramet. That refinery in that region, that literally is the original home of nickel before Sudbury was discovered. The first nickel that was supplied to the market came from boatloads of very high grade ore. It was nickel pig iron 1.0, very small boats full of very high grade nickel ore that got shipped to plants in that region of France. This is a nice high grade refinery that produces a range of very top end products. The challenge for it has always been it's very small and it's never had a massive source of supply. So to me, Sibanye now has a key piece of it. You've got a downstream technology that's proven, that works with a team that understands that, and the key you can then expand it 4x, 5x, 10x as they build their business. And so again, I think right now they have nickel coming from their PGM mines that they'll be using to feed that. But I think it's again a great sign that people are putting their money where their mouth is and snapping up assets again already about 6 months ahead of when I thought we would have started to see this M&A activity.
Yeah, it's interesting. I suspect we'll see a lot more of it a lot sooner, as you say. Some good news for Vale and Canada. The strike's over. Or
yes.
Is it?
No, the strike is over. The union did vote on it, and the strike has ended after several months. It's good. I mean, again, 20 years ago, Sudbury was much more impactful to the market. It was a much higher percentage of overall supply, and it produced it did produce twice as much as it did today. It's not as big an impact on the nickel market overall, but again, I think it will be helpful to supply in the very high end part of the market, which is what their refineries produce. And again, the fact that Vale was willing to settle, again, suggests that they would like to see more nickel coming out. If they had any concerns about the nickel market in the near term, medium term, they'd be quite content not to move on any of the offers. So, again, I think that's another vote of confidence in where the nickel market's heading over the next 12 months.
So just as trying to understand the market there, do you expect to see any more strikes? Was that just a Vale specific issue, or do you think other producers could be affected?
I think the thing here is you don't see as much in the older days where the older existing sulphate operations were a bigger part of supply. Labor issues were more of an issue. Today that's not the case with Indonesia and China being the bulk of supply. It's not like copper where Chile and Peru, you have some pretty active labor unions, and you've seen a range of strikes at different operations. I don't think for nickel, Sudbury is one of the few places where that remains an issue. New Caledonia is the other place where that labor action sort of raises its head. And we saw that earlier this year. We'll see what happens on that front. But with nickel, striking is not nearly as big an issue as say copper.
Okay. Now, the reason I ask is I was having a conversation with the CEOs of off record, and we're talking about sort of South America and I won't name the country. It's Chile. It's saying basically the further at the coast, a little bit more educated, a little bit more savvy, unions come to play, and they do like to bargain. They like to barter and bargain.
Yeah.
Whereas a bit further inland, kind of quite pleased with having a job, they're more likely to just get on with the business of whatever they've been asked to do. Less strikes, less unions, and so forth. But it's a kind of fact because you and I, lots of CEOs continually talk about First Nations groups and the local inhabitants as something that you need to take care of. But unionization is not something that I think this generation will have been used to. But perhaps I remember the sort of 70s, 80s, and 90s where it was very common indeed. And when I heard about the Vale strike, it was kind of, wow, not something I've really thought about or heard about for some time.
Yeah, no, and labor relations, Inco was steel workers and mine workers in the past was a very contentious. There was people killed on strike lines in the past. In the 1968 nickel spike, which again took nickel to $50 a pound in today's terms, was predicated in a period of strong demand when Inco was 30% of the market. Went on strike, and nickel prices just went to very, very high levels at that point in time. So it was much more of a big thing within the nickel market, with the structure of supply 20 or 30 years ago. But as a portion of overall supply, it's really diminished at this point in time.
Right. Okay. Well, look, there's just one more. I noticed, and we do talk about them a lot. Is obviously Talon have put out some good results. I mean, not a lot, but they've put out some numbers recently. What did you make?
Yeah. So again, they've got their CGO West area is nice because it's relatively shallow. They had some assay results a few weeks ago from a couple of holes there. Unfortunately, they're suffering under the same thing that a lot of companies. We're facing 8+ week delays on assay results. And so they published, the width of the mineralized intervals and the type of mineralization they were seeing. So again, multiple intervals over another 130 meter strike length. And so, again, it's nice to see a new nickel sulfide resource, continue to grow, continue to expand. And so, very, very happy to see those results from Talon.
So can I just ask about the assay wait time? So obviously, I think previously, how long would you have waited previously?
Oh, when we started drilling Canada Nickel, I would get my assays back within 8 to 10 days.
Right. Okay.
And now it's 8 to 12 weeks.
Gotcha. So there's a bit of a difference there. But with technology, with handheld devices, etc., can you, or do you as a company have a sense of what your drill core is going to return to you before it goes off for assay, or are you like the market waiting for the assays to come back and get to be clear about what it is that you've got?
Yeah, I know we're pretty good now at looking at various levels of mineralization in the disseminated sulfides to get a sense of what that looks like, and using XRFs. The issue is XRFs aren't accepted by exchange as sort of you being able to be disclosable to the market, and so for us, it would be much more helpful to have all that assay information come in, but we can still figure out where the mineralization's headed, where we need to drill, and again, by describing the mineralization, we try and provide the market some things that, okay, we think this is more like our average mineralization, more like our higher grade mineralization, and that's what we did with our Nesbitt discovery, with our McDermott discovery, and so forth. So you unfortunately going to see a lot more of that, and investors are frustrated, like where are the assays? But it's a structural issue in the market today.
But the point I'm trying to make is like, it doesn't slow down your thinking, your activity, your decision making. It's just a market reaction time frame from when you've done the drilling to when you can release the information. There's going to be a delay. Okay. Does that cause any problems, not just for you, but for companies in terms of people know information for a long time? Does that leak into the market? I know we talked before about stories about helicopter pilots, etc., working out things, but
no, I think what it is. Again, if companies can provide, like Talon did, sort of views on what the mineralization is, it gives you some sense of what that looks like. But it's frustrating, if you're going to go to raise money, people might be a little bit nervous to say, okay, well, is it really 3%? Is it really 5%? In our case, is it 0.35? Is it 0.4? Is it 0.3? So we can still move ahead, but it's not productive on multiple fronts to have to wait that long for various pieces of information to come through. So
right, okay. Well, look, Mark, I know, like I said, you're a busy boy today. I better let you go. Thank you very much for weekly catch up on the nickel market. Still seems to be going gangbusters. Long may that continue.
That's great. No, and stay long nickel and add to your length if you're not long already. So.